Good day, traders, and welcome to the Market Geeks premium video newsletter for June 18th, 2013. Let's begin with the fundamentals. The U.S. stock market moved higher Tuesday, helped by news of a pickup in home building and low inflation. The Federal Reserve is the big story till tomorrow afternoon. Investors are trying to guess what the central bank will say Wednesday and how long it plans to keep the stimuli program in place. For the majority of experienced traders today, it's just a random holding pattern till tomorrow's announcement. Analysts predict that Bernanke would use his Wednesday's news conference to cast a reassurance tone and make it clear that the Feds won't pull back on any of its programs until it's sure the economy can handle it. He's also likely to drop more hints about when the Feds could start trimming its stimulus programs. The S&P intraday chart is beginning to look a bit different, and the resistance area is now the new support area. There are three primary resistance levels that traders should be watching out for. The first level is 1662 on the S&P cash chart. This is the very minor resistance level, and I don't see much weakness or selling pressure coming in at this level. The next intermediate level is around the 1674 area. This is where I believe the market will put up a strong fight and may push the market substantially lower. If we don't break that level, the next level is near the 1660s, the high 1660s area. This is the previous high, and I doubt we will get there without any underlying fundamental changes occurring. But keep these levels in mind for the next several trading sessions. We have a new open position on the 10-year bond futures contract. I believe this position will see a lot of volatility during the next 36 hours. Keep an eye on this position because tomorrow's announcement will have a direct impact on bond prices. If you have large positions in this market, you may want to scale them down just a bit till after the announcement. Most financial markets will be affected by tomorrow's announcement, so lighten your positions may not be such a bad idea, especially if you have positions that are highly correlated, and you know who you are. There's a new inside day high setup for today. It's in the surgical and medical instrument apparatus sector, and the ticker symbol is ICUI, and the name of the company is ICU Medical. I'm not initiating any positions till after the announcements tomorrow, but I want to make sure you get your setups as well. Last week, we began our first part of our two-part series on relative strength pair trading and position equalization. Today, I'd like to finish the tutorial by going through the actual ATR equalization example using the two positions that we picked last week, one for the long side and one for the short side. The sector that we chose was the computer storage device sector, and for the long position, we picked NetTap stock. The first thing we want to do is apply the ATR indicator and measure the 10-day ATR reading of this stock. When we applied the ATR indicator, the 10-day reading comes out to 0.83. which tells us that the stock fluctuates on average about 83 cents per day. The short position that we chose for our spread is Teradata, ticker symbol TDC. The stock has a 10-day ATR of about $1.34 per day. This tells us that each share of TDC stock fluctuates about $1.34 per day on average. Since Teradata produces more volatility per share than NetTap, we want to find out how many shares of NetApp we should need to buy for every share of Teradata that we sell. All we have to do is divide 134, the larger number, by the smaller number, which is 0.83. This equates to approximately 1.61. So now we know that for every one share of Teradata that we sell, we need to buy approximately 1.61 shares of NetApp stock. To continue this example further, let's say I trade in 100 share blocks. I now know that for every 100 shares that I sell of Teradata stock, I would buy 161 shares of NetApp stock. Keep in mind that volatility changes and so will the ATR. Therefore, I recommend checking the ATR once each week and adjusting your position to the most current equalization number. Each week, measure the 10-day ATR and divide the larger number into the smaller one. This will always give you the correct ratio of shares to trade, so your exposure will be apples to apples instead of apples to oranges. Position equalization works equally well with other financial instruments, such as currencies, futures, and commodities. As soon as you find out what the ATR is in dollars, you can equalize your positions to provide you equal exposure across the board. That's it for today's tutorial. I will update you tomorrow throughout the day with the latest as usual.